Welcome back to the Deep Dive, the show where we take your stack of information and extract the most important nuggets of knowledge. We're here to give you that shortcut to being truly well-informed, complete with surprising facts, and just enough humor to keep you hooked. Today, we're undertaking a fascinating deep dive into Workday, the enterprise cloud powerhouse. We're drawing insights directly from their Q2 FY26 investor presentation and their latest SEC filing.
That's right. Our mission today is really to unpack Workday's recent performance, their strategic moves in what's, well, a rapidly evolving tech landscape, and the crucial details that tell us not just what they're doing, but why it matters for their business, their customers, and, the broader market. You'll walk away with a clear understanding of where Workday stands and the big questions they're grappling with.
Okay, so let's frame this then. How does a company like Workday, already a major player, continue to not just survive, but actually thrive and reinvent itself? Especially now in this dizzying age of AI and, frankly, unprecedented global uncertainty. What's their strategic North Star in this constantly shifting market?
Yeah, that's a great question to start with because it gets right to the core of their strategy. At its heart, Workday is positioning itself as the leading AI platform for critical enterprise functions. We're talking finance, HR, planning, spend management, and analytics.
Okay.
Think of them as the comprehensive cloud solution that helps massive organizations manage their two most vital assets, their people and their money. And crucially, it's all unified under one intelligent system.
And when you say massive organizations, just how massive are we talking here? Are we talking small businesses or really the global giants?
Oh, primarily the giants, yeah. Their reach is truly immense. They boast over 11,000 global customers spanning more than 175 countries.
Wow.
And if you look at the Fortune 500, over 65% of those companies rely on Workday. And that includes more than 70% of the top 50 within that list.
Wow, 175 countries and most of the Fortune 500. That's not just big, it's kind of foundational, isn't it? Like they're the invisible backbone for a huge chunk of the global economy.
Exactly. That translates to over 75 million users under contract, processing, get this, more than 1 trillion transactions annually.
1 trillion?
Yeah. This isn't just a big number. It highlights the vast runway Workday still has. But, also the intense competition they face in converting that potential into actual market share. They estimate their total addressable market opportunity at a staggering $160 billion as of late 2024. This scale is truly immense, underscored by their workforce to over 19,500 employees across more than 30 countries.
Those are some seriously impressive numbers for their market reach. With that powerful identity established, the next question obviously is, are the financials backing up that ambition? Let's dive into their Q2 performance, which ended, July 31st, 2025. What were the standout financial highlights from this quarter?
Yeah, the financials definitely tell a story of robust growth and improving profitability. Total revenues for Q2 FY26 hit $2.348 billion. That's a solid 12.6% increase year over year.
Okay, 12.6%. Pretty solid.
Right. But here's where it gets really interesting for their core business. Subscription revenues. They make up about 92% of that total, and they grew even faster, 14.0% year over year, reaching $2.169 billion.
14% growth in subscriptions.
Right.
So strong double-digit growth in their recurring revenue stream. What's the bigger picture here regarding future visibility? Like, are customers just signing up for the quarter, or are they locking in for the long haul?
That's a really important point about future predictability, and Workday looks exceptionally strong there. Their total subscription revenue backlog, you can think of this as revenue they've already contracted for but haven't yet recognized.
Right, money in the bank, essentially.
Kind of, yeah. It grew a remarkable 17.6% year over year to $25.37 billion.
$25 billion, wow.
Exactly. And more immediately, the 12-month subscription revenue backlog, which gives us a clearer picture of the near future, stands at $7.91 billion. That's up 16.4%. This massive backlog isn't just about future revenue. It signals incredibly strong customer lock-in and predictability. It creates a powerful economic moat against competitors.
That's a phenomenal amount of committed revenue. It really implies their customers are sticking around. So what does this all mean for profitability? And maybe for our listeners, could you quickly clarify the difference between GAAP and non-GAAP operating margins? Because Workday reports both.
Sure, absolutely. So GAAP, or generally accepted accounting principles, are the standard, rigorously defined rules that companies must follow for transparent financial reporting. It's the baseline. Now, non-GAAP measures, which Workday also provides, they exclude certain non-cash or non-recurring items,
Yeah.
things like share-based compensation, acquisition-related costs, restructuring expenses.
Stuff that management feels might obscure the underlying operational picture.
Precisely. Workday management uses these to give what they believe is a clearer picture of ongoing operational performance, arguing these excluded items can sometimes mask underlying business trends. So for Q2 FY26, their non-GAAP operating margin was 29.0%. That's a very healthy 412 basis points increase year over year. That's over 4 percentage points improvement.
It's a big jump.
It is. And even on a GAAP basis, the standard measure operating margin improved significantly to 10.6%, up 524 basis points. Cash flow also saw positive trends. Operating cash flows were $616 million, up 7.8%, and free cash flows hit $588 million, up 13.9%. These figures really suggest strong operational efficiency driving that profitability.
Okay, so robust growth, solid future commitments, and improving profitability across the board. What are they projecting for the full fiscal year 2026 then?
Looking ahead, Workday's guidance for the full fiscal year 2026 projects total revenues of $9.515 billion and subscription revenues of $8.815 billion. Both of those represent about 14% year-over-year growth.
So maintaining that strong growth rate.
Exactly. They anticipate a non-GAAP operating margin of 29.0% for the full year and operating cash flows of $2.850 billion, which is a 16% increase. They're also showing responsible capital allocation, with capital expenditures expected to actually decrease by 26% to $200 million.
That's a powerful story. Consistent, double-digit growth, increasing efficiency, and you mentioned earlier a 97% gross revenue retention rate. That just tells me their customers aren't just sticking around, they're practically glued to the platform. What makes Workday's offering so sticky in such a competitive market?
Yeah, that retention rate is indeed a strong indicator. It signals high customer satisfaction and, like you said, the stickiness of their platform. And it really goes beyond just the core product itself. It speaks to the comprehensive nature of their platform and, crucially, the ongoing innovation.
Speaking of innovation, that leads us perfectly into our next segment. Beyond the impressive financials, what's fascinating here is how Workday is evolving its platform. You mentioned AI platform earlier. Can you tell us more about what that actually entails and maybe some of their recent strategic moves to embed AI deeper into their offerings?
Absolutely. The Workday platform is truly designed for a unified experience that's across finance, HR, planning, industry solutions, and analytics. Their core technology relies on what they call an intelligent data core and enterprise LLMs, or large language models.
Okay, intelligent data core. What does that mean in practice?
Well, think of their intelligent data core as the central brain that connects all their different applications, HR, finance, planning. It allows data to flow seamlessly and generate insights across the entire organization. This powers everything from, natural language interactions, just talking to the system, to sophisticated mobile experiences.
Got it.
But they're not stopping there. They're heavily investing in extensibility through things like Workday Extend and Workday integrations. These allow customers to build custom solutions and connect Workday with other critical systems they might use. And crucially, their AI gateway, AI agents, and agent system of record highlight a significant push into advanced AI capabilities. They're really embedding AI throughout their offerings rather than just, tacking it on as an extra feature.
AI agents and agent system of record, that sounds like they're taking AI beyond just predictive analytics or simple chatbots. What exactly do those terms mean for a customer?
That's a good question. So AI agents here aren't just intelligent chatbots answering questions. They're AI systems designed to act autonomously, proactively automating tasks, maybe identifying anomalies in financial data, that sort of thing.
Okay, so actually doing things.
Exactly. Think of them as digital assistants for complex financial or HR processes. And the agent system of record is essentially the central brain that orchestrates and, importantly, records all these AI agent activities. That ensures transparency, auditability, and consistent performance across the enterprise. It's about AI not just giving answers, but actually doing work reliably and accountably.
So they're not just adding AI as a feature, but building it into the very fabric of their platform, enabling more autonomous action. It sounds like a pretty big undertaking. What kind of recent business wins are reflecting this growth in this platform strategy?
Well, they've recently welcomed some significant new customers across diverse sectors. You've got financial institution Banamex, the retail giant Carrefour, Memorial Health in the healthcare sector.
Big names.
Definitely. And they've also deepened relationships with many existing large enterprises globally. We're talking logos like Stellantis, Sanofi, Daikin, and the University of Virginia. expanding those existing contracts.
Okay.
Beyond customer wins, a notable strategic move is the launch of Workday Government. That's a new subsidiary specifically dedicated to serving the U.S. government. That opens up a significant new market for them. They also named Daily Pay as a strategic partner for on-demand pay, which aligns with evolving workforce needs. And they've expanded their presence in India, appointing a new president for the region. So these examples show their strategy of expanding both functionally and geographically while integrating these advanced AI capabilities.
It's really clear Workday is growing and innovating, particularly with AI. But, with great power comes, well, great responsibility, right?
Yeah.
Especially when you're handling the core financial and HR data for so many global companies. What are the broader responsibilities and maybe potential challenges that come with this kind of growth and this advanced technology?
Yeah, this raises a really important question about how they balance that rapid expansion with sustainable and ethical practices. Workday explicitly emphasizes what they call responsible growth.
Hmm.
On the putting people first front, they're investing in things like a skills-based organization, their VIVE initiatives, which stands for Value, Inclusion, and Belonging for Everyone, and robust talent development programs.
Okay, Vidi.
And for protecting the planet, they've actually achieved a net zero carbon footprint every year since fiscal 2021. They match 100% of their electricity with renewable sources and are committed to 1.5C science-based climate targets.
That's certainly reassuring to see such a clear commitment to environmental and social impact. But let's talk about acting with integrity, especially when it comes to cutting-edge tech like AI. We know that space comes with its own unique set of concerns, maybe even ethical minefields.
Indeed, and Workday says it's focused on delivering responsible AI and driving policy change around it. However, the use of new and evolving technologies, including generative and agentic AI, presents significant and complex risks. There's no getting around that. The legal and regulatory environment is evolving incredibly quickly. You've got examples like the EU AI Act imposing new requirements for both providers and deployers of AI systems.
Right, that's a big one.
It is, and they are currently defending against a lawsuit alleging their products enable discrimination. Now, Workday believes these claims lack merit, and most have actually been dismissed, but it highlights the serious reputational and legal risks associated with AI, especially in sensitive areas like HR and talent management, where biased algorithms could have very real-world impacts.
So, beyond the ethical challenges of AI, what other significant challenges or risks are on Workday's radar as they navigate this global landscape? It can't all be smooth sailing.
No, definitely not. Several key areas stand out. The continuing global economic and geopolitical volatility is a major factor. They mention seeing increased deal scrutiny and sometimes a lengthening of certain sales cycles.
So, deals taking longer to close.
Exactly. And sometimes they see reduced growth in headcount level commitments from customers, which directly impacts Workday's HR-focused offerings, obviously. Operationally, they rely heavily on third-party data centers, including AWS and Google Cloud. That introduces risks like service disruptions from power outages or even high temperatures, which they've actually experienced. And of course, the competitive landscape is incredibly intense. You have major players like Oracle and SAP, plus a whole host of specialized cloud and AI providers constantly evolving their own offerings. It's fierce out there.
And data privacy.
Yeah.
That must be a colossal concern for a company handling so much sensitive personal and financial information globally.
It's absolutely colossal, yeah. The global data privacy landscape is just increasingly complex and fragmented. You have regulations like GDPR in Europe, CCPA and CPRA in California, and now the new U.S. Department of Justice Data Security Program, which restricts access to bulk U.S. sensitive personal data by certain countries. Compliance isn't just costly and complex. Any perceived failure can result in significant fines and severe reputational damage.
It sounds like a constant tightrope walk.
It really is. It's an ongoing challenge to navigate these evolving legal requirements and the uncertainties around things like cross-border data transfer. Also, it's worth noting their February 2025 fiscal 2026 restructuring plan that involved a 7.5% workforce reduction. Now, while that was aimed at prioritizing investments, events like that can, impact employee morale and talent attraction down the line.
Right, that's always a difficult balance. Finally, just quickly, for our listeners who might be looking at Workday from an investment perspective, are there any structural elements they should be aware of regarding control and governance?
Yes, that's a crucial point. They have a dual-class stock structure. The co-founders, David Duffield and Anil Bhusri, retain a substantial majority of the voting power.
How does that work?
Well, the Class B common stock, held mainly by them, has 10 votes per share compared to the Class A stock, which the public mostly holds, having just 1 vote per share. So while this structure can ensure founder vision and maybe stability, it also means outside investors have significantly less direct influence over corporate matters. Things like the election of directors or any potential merger proposal. It's kind of a double-edged sword for agility versus accountability.
Okay. So there you have it, a truly deep dive into Workday's latest reports. We've seen a company demonstrating really strong financial growth, particularly in that crucial subscription revenue. They're expanding their global reach and aggressively pushing the boundaries of AI and enterprise solutions.
But, as we discussed, that growth comes with its own complex web of challenges. Navigating a volatile macroeconomic environment, intense competition, the significant ethical and regulatory landscape of AI, and those ever-evolving data privacy concerns. Workday seems to be actively addressing these, from their robust environmental commitments to their responsible AI policies, while also managing internal restructurings and that unique corporate governance structure.
It's a fascinating balance, isn't it? Rapid technological advancement, robust financial performance, and a clear focus on sustainability and integrity, all happening within a truly complex and often uncertain global environment. It really feels like a high-stakes game they're playing.
Indeed. The company's performance reflects a clear strategic focus on expanding its platform, its customer base, and its market presence. But it's all happening while they're acknowledging and actively attempting to mitigate a diverse array of risks and continually adapting to the world around them.
So as you reflect on this deep dive, maybe consider this. In an age where technology is advancing at lightning speed, particularly with AI, how will companies like Workday continue to innovate and deliver cutting-edge solutions, while simultaneously ensuring they are building truly responsible and ethical systems, systems that earn and maintain public trust, especially when that trust involves incredibly sensitive personal and financial data on a global scale where the regulatory landscape often feels like it's playing catch-up. It's a critical question, really, for all of us, not just those in the tech sector,